All right, now let's get a check on how markets are reacting to the Fed's announcement so far. Let's take it over to Jared Blikre at the Wi-Fi Interactive. Jared?
Yeah, stock's taking a little bit of a downturn. That is the initial movement. And let's check out the Wi-Fi Interactive to chart the intraday price action. By way of introduction here, we began the day largely in the green. And let me put in our line chart. You can see we dipped into the red ever so briefly. So giving back those gains today. The NASDAQ had been the leader, up about 2%, I believe. You can see it is hitting session lows right now, but still holding on to gains from yesterday's close. And the S&P 500 also inching toward its unchanged line down there. So interesting to see how that happens. I will say a lot of times the initial move is reversed during the press conference just because Powell's color on the markets is going to be very important. Here is the 5-year T-note yield. Now what's happening is the yield curve is flattening in a big way. The 2-year is up about 11 basis points. 5-year you can see is up 7 basis points. The 10-year not as much, the 4 basis points. The 30-year actually sinking 2 basis points. So we all know what an inverted yield curve means. That's a recession indicator, but we are not there just yet. However, at about 23, 24 basis points, we are very close to the recent lows. And by way of a comparison, we were at 150 basis points last year. Well, let's get to some of our heat maps here and check out what's going on in the sector action. Financials had been leading most of the day, up 1.75%. And you can see kind of a mixed board. Utilities, which are interest rate sensitive, those are getting hit the hardest. Those are down about 1.33%. Then staples and energy, real estate, healthcare, rounding out the bottom. So not the most dramatic price action reaction that we've seen just yet. But again, the fireworks are going to come with Powell. And I think there's going to be a lot of questions on the balance sheet reduction that's mentioned in the statement as well. That could occur as soon as May. And there are lots of reasons why that could have negative effects on the market. Also, really interesting that in the statement of economic projections, the Fed is penciling in an additional 6 rate hikes or about 150 basis points this year alone. So got to send it back to you guys now, but lots to unpack.
Thanks so much, Yahoo Finance's own Jared Blikre. And to